Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Wednesday, October the 12th, the year's 2022. Let's talk trading. Assessing the market with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. Walmal, we got news in a couple of minutes. So I was thinking we should maybe talk to the traders out there about assessing the market. I'm going to pull up a 1-minute chart so we can really see price action, and I've got the lines spaced every 10 with the current and previous days open, high, low, close. So we got 2 minutes to news.
2 minutes to see this thing go nuts, or 2 minutes for this thing not to do absolutely nothing, and that's, talking, the topic of the day, assessing the market. Well, that's part of, I'm not a big news trader, and that's no surprise to anybody that's listened to anything I've said before. And the reason why is because the market tends to move pretty erratically and does some crazy things. And I'm kind of conservative in what I do. I like to go and be, I may take a lot of trades, but all of my trades are based on some type of statistics, based on some type of known observation, and I make my judgments based on that. And it all comes down to assessing to what the market's doing. And I don't like it when we get news events that come out, because what happens is all the statistics basically go out the window. Now, yes, I know that those big, huge moves that can occur are included inside those statistics, but it's those out, it's an outlier that's sitting out there. And so for that reason, I'm just not going to, we're just going to watch and see what this thing does. Now, that said, I'm going to watch notice what I said, I'm going to watch what this thing does. And what that means is that I want to sit there and watch to see what the effects are on the market and look for opportunities once it settles down and gets, and it goes back into a more normal pattern, because that's what generally will happen for you. Or at least that's how I play it. What are your thoughts, sir?
Well, like I say, here we go. Basically, just pretty much trade what you see, but sometimes you have to be quick about it. Right now, you could have picked up about 20 pips and be out.
Right. Yeah, but the thing is, for me, because I'm probably a lot more conservative than you are in that respect, is that, I don't know about on your chart, but on my chart right now, it's moving on every tick. It's moving good 5 to 10 pips, and it's like now it's kind of slowing down a little bit. But I don't like the idea that I could go and sit there and say, aha, I'm trading what I see. It's moving down. Go and jump in. The next thing you know, because of spread and all the other games that happens in the market, I get put in, sometimes 5-10 pips away from where I wanted to get in. And then the market does its 5-10 pip jump in one tick in the other direction.
Right.
That's why I don't like doing it. I just rather, eventually what this thing's going to do is it's going to go and probably pick a direction that it wants to go in, and it will go and do it in a nice, methodical march. And I'll look for the opportunities, logical places to go into my trade, and I'll take my trade then. I don't have to go and make, a billion pips, in one trade. That's not how I look at it. I'd rather be consistent.
Yeah. Now, one thing about assessing the market is, I think, is you still use, the normal methods that you use on any other day, even when you're trading the news. So, for example, we came out of the upper wick zone here. Yesterday's open was at let's see, 110.54. At least I believe that's yesterday. Or did we go into the wick zone there? No, actually, yeah, we came out of the upper wick zone there. So to me, that's just a standard wick zone trade, nothing special. Or, you know, in previous days, open crossover. Those are just trades that I like to take. But the other thing to note is that if you are with a prop trading firm, they usually don't let you trade, the news. You have to either not trade the news anywhere from five plus, from the news event plus or minus, 5 to 15 minutes. They just don't want you trading news. And that might be
Yeah,
because of the unpredictability of the market. And the other thing about assessing the market, many times it's like we don't care why it's doing. What our job is to identify what it's doing, and that is it going up or is it going down? The why doesn't matter. That's for you can find that out later. Like last night, about midnight East Coast time, 9 o'clock my time, I just happened to sit down in front of the screen and I watched price run 100 pips up in 2 minutes. And then it came down 50. But it wasn't my time to trade. It wasn't my normal time. I just watched it. But it was just like, wow, what a time to put on a McGilla trade. And we're in the launch pad, Walmal.
Yeah, and that's again, you kind of alluded to it a moment or two. There are lines in the sand that get drawn, and that's one of your lines. And yeah, the thing is that you could have, you're not looking to get, a big killing on that, but you could have picked up, 3 pips, 3.5 pips, if you would have, gone in on that. That's the nice thing about it. And you're exactly right. We got to trade what we see. And part of trading what you see is assessing exactly what's going on. Think about it. That move off of that news, it moved down. Let me go and get an accurate reading on that. That movement down off of that news, it dropped 24 pips. Okay, but notice what it's done now. It's retracted, half of that, and that's what I was kind of talking about earlier, where you can very easily get into a trade and yeah, great, I win the trade, and the next thing you know, you blink an eye, you're not quick enough, you didn't get your TP in quick enough, you didn't get your stop loss in quick enough, and the next thing you know, you're out because you got dumped on pretty badly, and that can very easily happen. That's why I don't like to go and trade news events, and that's probably why prop firms don't like it as well, because they know it's a very risky thing. The good thing, but it's like anything else in life. The more aggressive you are, the more risk that you take on, the greater possibility, or not the greater possibility. That's wrong, but the greater amount that you could win. Not the greater possibility that you can win. That's off the table. But what is on the table is that you can go and you could clean up, like you said with that example from last night. Imagine you picked up, 100 pips in one direction and picked up 50 pips in the other direction. You could have very easily cleaned up. Imagine if you had the capital to go put 10-lot trades on that. I mean, we're talking tens of thousands of dollars that could have been picked up. But the thing is, for me anyway, it's not worth the risk. I'd rather not. I'll be conservative about it, and I'll just wait. I'm sitting here on my hands, and I'll just go and wait. It's now been about 6 minutes after the drop of the news, and if you notice, price is now starting to figure out what it wants to actually do with the news that came out. The news that came out was technically it was good for the currency, for the U.S. dollar currency, probably not so good for the country of the United States, because the PPI, which is a measure of inflation month over month, it actually is double as to what was expected. So it came in, they were expecting a 0.2% increase, and they got a 0.4 increase, which across the year, that's another 4% on top of the nearly, depending on who you're talking to, 8 to 12%. So that's in terms of the economy, probably not so good. But, in terms of the currency, well, guess what we have 2 o'clock, 2 o'clock Eastern time this afternoon. FOMC is meeting, and believe me, those boys know exactly what has already happened. They knew these numbers, before they're going to make their decision, and that's probably going to affect what happens this afternoon, or it has already affected. Let me put it that way.
Right, and I'm just showing. I took the auto scroll off of my chart so I could have the chart frozen to show what happened last night. And you can see here, I've got the every 10 pips, I've got the horizontal lines as dots, but you can see the solid lines that are colors are the lines I like to look at, the previous days and current days open, and those are the orange lines. So you see here, if you from orange line to orange line in 2 minutes, those are the types of trades where you just candle color at the line. You can see across the double O here, this big thick line, and once again, candle color at the line. And it's just one of those things where even during something crazy, you can stick to your method and be quick about taking the pips. And this thing it just literally just shot up. And so, depending on where you took made that entry, as soon as you see plus 10 pips, maybe you can just, take them off the table, or maybe you want to ride it. It just depends on how, price is moving, and that's part of assessing the market. How is price moving, and can I take advantage of it?
Right.
Or
exactly right.
Or is it moving in such a way that it's going to be really hard for me to win?
Yeah, I mean, and a perfect example, earlier today when I was trading, it's the type of thing where every tick it was moving, 4 or 5 pips. Meanwhile, my spreads were normal spreads. And sort of like the problem was that, okay, here's the line that I want to go trade at. And, I had it happen to me one time where I went to go long, and it immediately went and took my spread plus like 5 pips on the very next tick, and I was immediately down like 5.8, pips, without even batting an eye. And all I did was enter the trade, and I was immediately in that. And the thing is, you can take all that and just, you can go and say that's just market movement, that's just bad luck. No, in my opinion, what that was, I started trading before I started assessing the market. I messed up. I should have sat down and watched what the market was doing, because, I just immediately I sat down at my computer. I looked at the news to see what the news was for the day. I looked to see where the market had moved, in terms of the number of pips for a daily range for the day. And that's all I did. I didn't watch the charts for a few minutes. I didn't watch for price action. So I messed up.
Yeah.
So my first trade out of the gate, I was in trouble.
Yeah, so fastest 15 minutes in trading is almost up. But I just wanted to show the traders out there something. You can see how price crossed the 40 line on the M5, and it was red. Here it crossed, and that was to the downside. But here, looking to go long, that was probably could have picked up maybe somewhere between 5 and 7 pips right here. And then on this particular one, it crossed the 40 line, hit a high of 43, and then started reversing. And so in these types of markets, it's like once it stops moving your direction, you have to get out, because you don't know what that next tick is going to be. So, fellow traders, I hope you've gleaned something from today's video. And just always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out. Oh, and by the way, if you haven't subscribed, please hit the subscribe button and the like and the bell.